feels like Wednesday, but it's actually Thursday. Here we are, another wonderful day. So we can see on the monthly, we're trading inside the previous month. Remember, December we had that large +4 month here, and we are trading inside of it. Getting a little bit of balance here. Um, what wouldn't be surprising to me, and what I think would cause a lot of panic from people that are price addicted, so not people here, but people around the internet, would be this large stem that we're getting, and then we get this kind of sideways trading here on the monthly, developing that P. So we get that move, indication of some short covering. Now, what is what this would lead to, or what would be kind of a negative aspect for the market if this were to happen, would be this P-shaped development, because that would basically tell us that most of this last leg up was a short covering rally. And then after it's done, if we don't get continuation to the upside, then the odds start to increase that we revisit this lower balance and stem with that P. So that's just one possible scenario that I was kind of playing out in my head, or just kind of thinking what could happen if we just kind of balance inside this month, for the next couple of months, as the Fed decides what they're going to do and the market decides how it's going to react to the Fed's decisions. Because basically that's kind of what the market is hanging on. You saw yesterday as the minutes came out, the market didn't do much. We shot up, we shot down, we shot up, then we came back down, right? And a key thing, and we'll get to it when we get to the daily, but where we bounced off of was a very key thing. So now switching over to the weekly here, you can see, a little bit closer term of this P shape. Now we're getting a -4 on the weekly, right? Indicating that momentum is starting to build to the downside here. Like I said, if you're new and you don't know about the +4, -4, just stick around for a little bit. It's a very simple concept. I know it doesn't seem, I mean, maybe it doesn't seem what it is, but a lot of people overcomplicate things, and it really doesn't need to be that complicated. If there's 4 data points that make up momentum, and that's the open, high, and low close, anything more than that is just overdone, in my opinion. But so we're getting this kind of P shape here on the weekly. It'll be interesting to see kind of how we react. I think, and this is a level that we've been talking about, 47.68, closes below this 47.68, indicate a bit of weakness and start to increase the odds and possible test of this gap down here. We also do have some single prints, and then there's a large 4,700, right, very round number here below us. Switching over to the daily, this is what I was talking about. You could see the market really just came up, and it did it a couple times. We get on the profile, you really see tested that 68, wasn't able to hold, and then ended up closing down here on the low. Another -4 day. Yesterday we were also one time framing lower, so that will be something that we want to pay attention to, right? We're not one time framing on the weekly, but we did get a cessation of one time framing on the weekly, so that's definitely something that we want to be paying attention to. Our -4 level here, something that we definitely want to be paying attention to as well coming into today, and that settle was 47.4650. So that'll be kind of our break point today. You can see this is basically the low of balance, so I wouldn't say that close was necessarily real bearish or a hard stop, but it is something to pay attention to as we're kind of getting this trend down, this one time framing down. And we do want to kind of understand that at the low of balance, the first thing we want to monitor for if we get this break would be continuation, and continuation would take us back down to the 30 and then down to 28 level. 3028 level. We'll take a peek at the profile here. Oh, excuse me. Take a peek at the profile here just to get a little bit more in depth. It'll be that 36 level and then that 27 to 4709 level. So on the profile yesterday, you can see we had an untouched settle. What do we say? 47, 46, 50 was the settle from yesterday. That's our -4. You see overnight inventory is actually fairly long. It's pretty mixed, but for the most part, most of the time was spent overnight above the settle, and we just recently broke below it. Yesterday, you can see we also finished on a spike lower. And so today, another very interesting setup, right? As we have value here, and it's looking like it's going to be play number one, right? Unless we get a little rally. We do have some time, about 20 minutes. But it's looking like the first value area that's going to get tested is going to be that value area low, which lines up for the most part with the overnight point of control, right? Which is above our settle. So what happens in this situation, because our typical play off value, right? Look for it to fail to get to the backside of value and go with developing value. Well, in this case, because we're below the settle, or because we'll be above the settle on a -4 day, right? -4 day momentum wise, it'll be very, very cautious position. And so what I'm going to say is this level here, this is our lower distribution from yesterday. What we don't want to see is a test of this upper distribution. So if you are going to play the short from this level above the settle, right, which is going to be a cautious short, you don't really want to see us get above this lower distribution. We had our point of control there. You want to see them kind of continue to sell that level and move the market lower and develop value lower, looking for that breakout of balance. Now, like we said, we're at the low of balance, and what can happen, remember our 68 level is a very key level. If if you don't get this continuation at the low of balance, a lot of times we get this reversion to a very uh, position of equilibrium, right? Which is relatively just a position that has been tested or a position that's agreed upon price, right? So at 47.68, buyers and sellers both agree that that's a decent price to trade at. And so that's why the market keeps revisiting this level. That's what can happen here. We get this failure to push down below the settle or to hold below the settle. The market starts to cover shorts. These people will be off sides. And then you get our sell zone from yesterday that we never reached, which would be continuation of short covering to the upside. Now, there is one thing, and this is a new thing that we've added recently. If we take our 30-minute chart, right? So this is just like the TPO, but we take our first bar, so we can see where the market's at right now, 47, 46. We're going to be opening up inside this. So let's say we open up a little bit higher. Say we open up 47, 48. We trade up. Well, what that's going to do, and we close up on the high, what that's going to do is it's going to give us a +4 bar on the open. So what that can do is give us that opportunity. We get below that close of that first 30-minute bar. That gives us the opportunity to get short, even though we had that -4 from yesterday and we're trading above. These are kind of the situations or the things that you're looking for in order to really set up this trade, and in order to give yourself that confirmation and not go against the trading plan, right? Because a lot of times people focus on one data point and then it gets them blindsided, and then they just are like, oh well, this is happening, so I'm going to do this. But like yesterday, if you took any longs, right? Not that there was an opportunity for longs, but if you did take any longs, you were trading against the market, right? Value obviously clearly, and you can see it on this chart easier, I guess, if you're unfamiliar with the profile, you can see value clearly lower, right? Here's value from the previous day, clearly lower. So even though the market did rally from here to here and rallied from here to here and rallied from here to here, any of these long trades were traded against the market, right? And that's because people chase price. And people get price addicted. Like, oh, the market moved from 72 to 88.04. I hear that all the time. Oh, the market went up 25 points. It's like, yeah, well, you're stuck on price. They start paying attention to value, and I promise that your trading will improve. You continue to just stick to price, you're gonna have a tough go for the foreseeable future. Now today, finding your stop loss or finding your clear trade limitations, we'll go for this risk reward here. We can see the value area from yesterday about 15.5 points. That's putting you at about a 3-point risk, right? So if you're getting a position, you should be risking about 3 points, maybe a little bit more, depending upon what type of percentage. I'm using 20% of the value area, right? Points divided by 20% is about 3. So that's what I'm going to be using. Obviously you guys use whatever you will, but that's how it works for me. We do have some news today. We pretty much already had the unemployment forecast, our employment claims today. Market traded lower off of the news, but has since kind of rebounded, and we're really trading at the low. We did finish in a spike yesterday, and opening up within the spike is typically an indication of acceptance of these lower prices because this spike was to the downside. We had a poor high yesterday, indicating a lack of buying. So you want to be aware of that, right? Typically, when we get this acceptance of lower prices, we will trade lower. Our targets, like I said, 36, and then this large area from single prints down here. Now, we do have a couple Brad prints, as I like to call them, uh, here in the profile from yesterday after the liquidation. So possibly that 58 to 60 could be a decent opportunity to get short, depending upon how the market opens up. But we'll kind of see. But for the most part, like I said, unless we get above 62, I'm gonna be looking for short trades. Other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan, and I will see you all tomorrow.